What is up, guys? I am finally back. It has been 3 months since my last post, but it has been 10 months since I started, using this new strategy that I developed. And now I'm gonna finally give y'all an update on how the last 3 months have been, how it's been going, what's been going on, new developments. Have I been making money? Have I been losing money? What's the plan going forward? I'm finna get into all that. Hopefully I'm be able to get it out in less than like 10 minutes, but we gonna see. So the last time I made a video, it was November 21st would have been the last time that you seen the Excel sheet, seen what the profit was at, and a lot has transpired. If we look at directly after, which would have been November 21st, my next sales come in around November 25th. That's the time, my last video, if you remember, I talked about, liquidity issues, all my capital being fully deployed. So trying to figure out how to work through that new challenge. You can see that I lock in a lot of very small gains. And then like shortly after that, going into December, they're like modestly higher, but they're still fairly low. You can even see in this category, we're looking at how much I have invested in all these positions and how much I'm cashing out. The amount that I have invested is relatively small. And then going into January, they still around the same size, maybe a little bit smaller. And then around, on the 13th, I sold out of a lot of the small positions that I was in, because at that time my whole strategy was my thought process was, let me cash out of these positions and try to keep focusing on averaging down across the portfolio. But around the middle of January, so the 15th, I had a big splash. CoreWeave, I had $600 in CoreWeave. I ended up selling out for $60, so I made 10% on CoreWeave. And the reason why I made 10% was because I started flirting with a rule that, look, I just sold out of all these small positions. And so now I'm left with mostly these bigger positions that I've been building on for months and months and months now. I feel like I need to be fairly compensated for all the time and money I've invested into these positions. I can't treat these positions like these other positions where, I have $20 invested, I just bought it back, and it's like, okay, now that's my most positive position. So now I'm out of cash, and I need more cash. So I guess I'm gonna sell this. I can't treat it like that. I have to get something out of this. So that's when I first started flirting with this idea that I need to at least get 10%. So I sell CoreWeave, I make $50 in profit on that. Actually it was 60, but if you see here, there's 3 sections down here because that represents 3 different people. So I got my profit, their profit, and then the third person's. I have about 83% of the profit, and then the next person get majority of what's left, and then the other person get a small percentage. But yeah, that's why if you're looking at the profit numbers in this category, it wouldn't match up if you did, the total invested minus, or total cash out basically minus what was invested, because it'll be spread out across all 3 spreadsheets. But back to what I was saying. So we had CoreWeave, and then after that I sell AMD for 32, so another 10% return, and then I sell Alibaba for another 10% return. So all of a sudden, after these months that I've been cashing out of getting practically nothing for all these positions that I'm in, all of a sudden I start getting the profit needles start kind of moving a little bit, right? Then we have GameStop, Meta. Then after that, ANT, JP Morgan, Broadcom, Nike. Those are all relatively small profits that I took on those because I was just, trying to, cash out of those, get some more liquidity. Because like I said, I was still flirting with the idea of 10%, but I wasn't fully committed to it. Because I'm like, okay, maybe if I have like a threshold, if it's over a certain number, if I have like maybe over 300 invested in it, I'm like, then I'll go for 10%. But if it's less than that, then, maybe I might sell a little early. But then just on the 2nd that just passed of March, I was investing in Circle, which was for a long time, one of my worst positions. But then all of a sudden it had a big reversal, hence my strategy in order to, keep buying into market weakness and then ride the reversal back into profit. That's exactly what happened. I had $769 invested in that, and I ended up selling it for $862, and I came out with almost $80 profit for me. So now I'm firmly set in I need to get 10% for whatever position that I'm holding, because at this point I've been holding these positions long enough that I feel like I said, I need to be fairly compensated for the amount of time that I've been putting in, waiting for these positions to go positive. Now, Circle, what did bite me, what kind of, bit me in the butt about Circle was I sold it, at, what was it, $93, and I think it's like around 110 or something right now. So did I leave about 30% on the table? Maybe. Am I a little salty about that? Definitely. But like I said in a previous video, you never really if I knew, I didn't know at the time that it was going up 30%, because had I known that in 1 week it would be up another 30%, I obviously would have held. But how did I know that it was going to go up another 30%? It could have went up to 10% profit for me, and then all of a sudden fell back down another 15%. So now I'm left with nothing. And on top of that, just having, $700, over almost $800 invested in this position, being able to cash out, get some of that liquidity back, and build up my cash a little bit more was very important for, just for, psychological and stress reasons, constantly not having to figure out like, okay, how am I going to continue to average down in these positions? Because where I'm at pretty firmly right now is that I won't be buying back put like stocks from my following list. I have a big following list, like 50 stocks if not more. I'm not gonna be buying anything more from that list outside of what I already own until my cash hits 25% of my total capital. So it does help that getting that $800 back, and honestly it was more than that, but basically getting that $800 back, getting that back into cash, puts me a little bit closer to that 25% that I can get back to what my strategy was when I originally created it, which was to average it down amongst a lot of different positions. But when you run out of capital, obviously that becomes a problem, that becomes an issue. So yeah, that is what's been going on. I wanted to get the whole video done in 10 minutes, but that's already been 10 minutes. So yeah, I might have to cut it down. Y'all might not see all of this. But look, that's what's been going on. Let's get straight into, and one last thing that I didn't mention. What is my total profit at this point? Because I just told y'all about all these positions I've been cashing out. I didn't tell y'all what my total profit is. My total profit across, all three of these different people, because all these different people are all invested. All the money is pooled together, but the profits are just split according to how much money you have in it. It's like with anything, like we're talking about investing, so you should understand that concept. But all profits altogether that this strategy has generated is just over $1,400. I think at about $1,401. So I have $1,138, and then the next person $160, and the next person. Don't go on them too hard, but they just getting out. They just threw me a couple dollars and said, here, invest this for me. So they only got $2.86. It's okay. We all start somewhere. They just haven't committed, as much as I've committed, and the second person has semi-committed. So, let's get straight into what the portfolio looks like today. Right now, I have $6,570 invested in the market. Okay. Today, we are up 1.95%, almost $100. The market is still open, so it's fluctuating. On the week, we up $324, 6.6%. And then on the month, we're up 13.22%, up $769. So look, even with that, 13%, that sounds great, right? However, the portfolio overall is still down 20%. So is that great? No, but if you look at previous videos, the portfolio has been down since like November, and I've still been, cashing in profits. So it's not really a big concern for me that my portfolio was down, because I obviously believe that all these positions are going to be coming back into the green for me soon or eventually. Perfect example of that is Hims and Hers Health, which was flat out the worst position that I had, because it just fell horribly, like you couldn't believe. My average cost was $34, and the lowest it got, I think, was about $15, and it was down pretty bad, like 50% or something like that. And then over the weekend and today, Hims and Hers Health is up 40% right now on the day, because they had a big lawsuit thing issue that they was trying to work out, and then they worked that out, as well as making a deal with Novo Nordisk. So that deal, as well as them resolving that whole lawsuit problem, really shot the stock back up, and I feel very confident that that's going to be in a profit soon. Do I know exactly when that'll be? Of course not, but I think it'll be coming in the next few months. Now, you might be thinking, well, why am I not going like straight into just, okay, you have $875 in cash right now. Why are you sitting on all this cash? Like, don't you want the money to be in the market, like working? Why are you holding it? Well, like I alluded to it earlier with the whole, I need 25% in cash to get back to, my original strategy of averaging down all these positions, because I don't want to keep getting into the situation, what happened before, which when I showed y'all the my Excel sheet with all my sales on, you see all these very small sales, because I'm so spread out and the positions are so small, and I don't have any cash left to keep averaging down across all these positions, that it's like, okay, I have to sell something, or I just have to keep adding money. And eventually, I'm a college student. The money right now, I can't just keep adding every single day. And I don't want to be in that position again. So that's what the 25% rule is. And also, there are personal things that I have coming up soon that I may need to cash out a very large percent of this, of the money I have invested in order for something. So I don't want to put too much of my personal business out there. I may need it, I may not. I still need to see how it may work out, but that is coming up in the next 3 months. So I don't want to be in a position where I can't cash out. That's really the main point. I want to be in a position where, if I only need to cash out of a few positions and just take what I have in cash and, run off with that. That's what I want to be able to do. I don't want to have everything in there, and it's like, okay, well, how am I going to cash out? A lot of these positions are still down at that time. But I still want to use that capital in order to, get out of some of these positions that I'm in. So I'm only adding to my top position, or like top 2 or 3 positions in a day. Which you might be thinking, whoa, Kayla, you just switched up this whole time you've been talking about buying into market weakness, and you only buy when the market go down and this and that. Yes, that is true when my strategy is operating normally. But as I said when I first started this, and it's all coming back full circle, sometimes, as the strategy is named, the Mayweather Method, when you have a plan going into a fight and your opponent starts doing things that you didn't anticipate, you gotta adjust, you gotta switch, and you can't be so stiff-necked that you're not willing to do what needs to be done in order to win. And so look, the reason why I'm doing it now is because I can't continue to take good money and throw it at they're not bad positions, but they're down positions, and they're not the positions that's should be rewarded. I should be rewarding the positions that are doing well when I have liquidity issues. Okay? If I had unlimited money, I would not do this because I have no reason to do it. I would just keep adding to my worst positions until they hit that big reversal like Circle did, and I wouldn't feel the need to sell quickly like I did with Circle. I probably would have still been holding Circle, and I would have saw that like 40% return it would be now had I had unlimited money. But I don't have unlimited money, so I have to operate within my constraints. Maybe one day I might feel like I have unlimited money, but that day is not today. Yeah, that's pretty much the logic. I'm rewarding the positions that are doing better because I need to be able to cash out of these positions. That's just how it is. Now, is it limited to one a day? Like, am I only going to buy the top position like $10? Because it's $10 every time. If I'm buying $10, or I'm not buying. It's not like I'm buying $8 or $6 or $12. It's $10. It's still the 10, 20, 30, 40, 0 to 2%, 5 to 8% thing that my strategy was built on. But it's kind of evolved for this specific situation. So that part is a little bit flexible. Every day I'm sending $10 to my best position, no matter what it's at. If it's up to 2%, I'm buying another $10. If it's down 2%, I'm buying another $2. If it go down 5% or 6%, I might buy like another $10. I might buy 20 on a day. I might buy maybe 30. But that part is at least firm. That my best position is getting $10 at least, no matter what, every day. Now, some of these other positions, they might get a little bit too. Like if you second positive or the least negative. Right now, Shopify is the least negative. I didn't buy 10 today, but a couple of days I did give like a couple of dollars to, or like $10 to Shopify. I gave 10 to Tesla one day, 10 to Netflix. These are all positions that were down by less than 10%. So if it's a little flexible. I'm still experimenting. I'm still thinking about it, trying to figure out what is the best decision to make. But right now, I'm kind of thinking about going to just whatever is the most positive, or if I have multiple positives, sending it to those. But yeah, that's what's going on with the portfolio today. For the most part, it can get very complicated, the market, when you have all these different factors influencing it. You got inflation. Now you got the war between us dropping bombs on Iran. Now you got oil prices going up, and that having an effect on other parts of the economy and affecting other businesses. You just can never really know how the market is going to react. Sometimes you think, oh, well, the market should do this, but who am I and who are you to tell the market what it's going to do? Like, you can't tell the market what it's going to do. The market's going to do what it wants to do, and you just have to be, just ride the wave. So yeah, that is this video. I hope you enjoyed it. I am really gonna try this time. I'm gonna try to post a little bit more consistently, give y'all more consistent updates, because I want y'all to be able to see, day to day. I want y'all to be able to see, like, how is it moving incrementally. I don't want y'all to see it every couple months and you just be like, not that I don't think y'all believe me, because I can prove any of these, this big old Excel sheet. I got all these sales that I'm saying I'm doing. I can pull up any of these on my Cash App account and show you that I made this transaction. But It's just I want y'all to be able to feel it on a day-to-day, or at least a week-to-week. I don't want it to be too spread out. But yeah, I appreciate y'all for sticking through this video. If you stuck it out, you know, I hope you learned something from my strategy. I hope you found it interesting. Really, if you have any questions, if you have any questions, if you have any comments, please comment it down below. I will respond to any comment or question that anybody has. But yeah, also drop a like, subscribe to the channel if you're new and you want to see more content like this. You know, right now, it's this whole strategy, like I said in my earlier videos when I was just starting this channel, is that this strategy is meant to be simple, something that anybody can do. You don't have to have extensive knowledge of the markets to be able to do this strategy. So yeah, I'm done yapping. If y'all want to see more content like this, subscribe and drop a like down below, and I'll see you on the next one. Peace.